Hi, this is Paul Garver again. Looking forward to giving you the second installment of our top 10 estate planning mistakes. We're going to start today with the second estate planning mistake that we presented, and it's the improperly arranged life insurance. So I have this discussion with a number of clients. Many times we find people have life insurance policies on themselves to help take care of loved ones or beneficiaries that they might have. They could have $50,000 insurance policies, $100,000 insurance policies, $500,000 insurance policies. I've seen all types of those things. The first thing that we need to think about is the maturity level, both emotional and age, of the beneficiary. So, I know I have a number of clients who are concerned about their 18-year-old son or daughter getting $100,000 in a life insurance policy. Often clients think that that's going to be spent on something other than college and education and that kind of thing. Probably a couple of good parties and a nice new car or something like that. So what we really need to take a look at is how can we utilize the estate plan as a vehicle to kind of institute some fiscal responsibility and make sure that the beneficiary reaches an age or reaches a maturity level where they can handle receiving that lump sum of money or at least a partial amount at each couple of years. And this is often accomplished with what we would call a testamentary trust, or a springing trust is another name for it, coming out of either a will or a trust. And that's a very simple thing to accomplish. You could set different disbursement ages. I talked to a number of clients, and everybody has their own set idea on what the proper age is going to be when their own beneficiaries might be able to handle that money. Some think 18, some think 25, some think 30. I've had clients tell me 40 until they think that their children can handle that amount of money. So it really just comes down to the individual situation and what each individual client knows about their own beneficiaries. Also, one of the things, in our last installment, we talked for a little while about the estate tax exemption amount. And just to kind of review that, we're recording this in February of 2010. Currently this year, because Congress has taken no action, we have a repeal of the estate tax. That is to say that there is no estate tax this year. Next year, if Congress does nothing, we are reinstituting the estate tax at $1,000 exemption amount, or pardon me, $1 million exemption amount. That $1 million exemption amount means that if I had a $1.5 million estate, $1 million of it would be excluded from estate tax, leaving $500,000 applicable to the estate tax. The estate tax is 55%, which means $275,000 would be subject to the estate tax. So really, what we're looking at here is, a number of clients say, "Well, that's great, Paul, but I don't have $1.5 million worth of assets." But then I start to talk to them about their life insurance, and you find out that they have $1 million life insurance policy with maybe $500,000 of other assets. That $1 million life insurance policy is owned by you. It is in your estate, and therefore subject to estate tax. And even if you try to transfer it outside of your estate by using a number of the techniques that we can utilize, irrevocable life insurance trust, or some planning that we could do if you are a small business owner and own your own business, and some planning that can be done from that perspective. Even if we're able to do that planning, if you already have owned the life insurance policy, it needs to be transferred out for 3 years before it's not going to be considered part of your estate. So there is a 3-year look back by the IRS and by the government on that. Better yet is to start from the beginning and have that life insurance never be a part of your estate. Is the best way that we can accomplish that. We can accomplish that within, again, like I said, an irrevocable life insurance trust, or with some smart planning if you own a small business. I'd love to talk with you more about any of these issues. Feel free, as always, to contact me at the numbers and the email address that's provided. Looking forward to talk to you next week about the next installment of the top 10 estate planning techniques, or pardon me, the top 10 estate planning mistakes.